Welcome to the show where you'll learn how to invest in mortgage notes, the savvy real estate investor's secret weapon to create cash flow without tenants and property acquisitions for pennies on the dollar. My name is Robert Haitha, founder of Fixed Notes, and my mission is to make note investing ethical, profitable, and accessible for you. In every episode, we're democratizing the industry to put these powerful Wall Street assets into the hands of Main Street investors like you. So without further ado, let's get into this show where you're in good hands with my AI clone. Let's go. Welcome back to the Real Estate Note Investing Podcast. Each week we dive into the strategies, systems, and stories behind buying and resolving distressed debt. Whether you're just getting started or scaling your note business, you're in the right place to learn how to profit like the bank, without tenants, toilets, or trash. Today, I want to talk about something that a lot of new investors ask when they're getting started in the note business. Why would a bank ever sell a mortgage note? It's a fair question. I mean, if notes are backed by real estate and paying interest, why not just hold on to them and collect the cash flow, right? Well, let me pull back the curtain a little bit. First off, banks are not in the business of managing individual loans. They're in the business of originating loans, collecting fees, and then moving that debt off their books. Think of banks like a factory. They manufacture loans and then they ship them out. They're focused on liquidity, regulatory compliance, and hitting their internal performance metrics. So holding on to a bunch of old, messy, or non-performing loans, that's a drag on their operations. There are a few main reasons banks sell notes, and if you understand these, you'll know how to source deals more effectively. 1. Non-performing loans. The biggest one is obvious. The borrower stops paying. Once a loan becomes 90 days delinquent, banks are under pressure to either resolve it fast or offload it. Regulators want banks to clean up bad debt so it doesn't affect their balance sheet. So they package those non-performing notes and sell them at a discount. 2. Charge-offs and loss recovery. Sometimes the bank already charged off the loan, meaning they've written it off on paper, but they can still try to recover something, even if it's just 10, 20, 50 cents on the dollar. That's where we, as investors, come in. 3. Strategic cleanup. Even performing loans get sold. Maybe a bank is exiting a certain market, like mobile home lending or second mortgages. Or maybe the loan is too small to justify managing. Selling it frees up capital and helps them focus on core operations. 4. Risk reduction and capital requirements. Every loan a bank holds requires them to hold capital against it. So by selling off loans, they improve their capital ratios, which is a fancy way of saying regulators are happy, investors are happy, and the bank can go out and make new loans. So what does this mean for you? It means there's a steady pipeline of opportunities for note investors if you know where to look and how to build relationships. Banks, hedge funds, credit unions, private equity, they all have notes they want off their books. You're solving a problem for them. And let me say this, don't overthink it. Banks are motivated sellers, and when you position yourself as a professional buyer who can close deals, they will call you back. It's just about being consistent, doing your due diligence, and solving real problems. All right, that's it for today. Short and sweet. In the next episode, we're diving into one of the most important distinctions in the note world, performing versus non-performing notes. The difference impacts your returns, your risk, and your strategy. Thanks for sticking around to the end, and thank you to my trusty Robot and the Fixed Notes team for putting together another episode. If you want to learn more and hang out with the real, not AI version of me, join our free school community at school.com/fixednotes. That's SKOOL.com/FIXNOTES. In the meantime, we'll see you in the next episode.